Hi, welcome to another edition of Weekly Market Report by tradersclub.co.uk. We are looking at the markets week beginning 18th of November 2012. Disclaimer, anything that we discuss here, it's available in a public domain and therefore it should not be considered to be advice for your investment or trading. We are simply sharing the information for the benefit of the club members. Firstly, let's look at the price action of Apple computers. We had quite a bit of a selling lately. We had a bearish cross here where 20 period moving average crossed 50 and also here where 20 crossed 200. Price action is trading well below 200 period moving average. All of the indicators are at the oversold, although the moving average did not cross MACD. The daily candle formed a bullish hammer or a possible indication of a reversal or a corrective bounce back on Friday, and the price action is currently supported by 50% fib retracement from significant lows of 307 to the recent high. The price action that's coming our way next week will be telling, is it possibly a creation of a lower high, an opportunity to short again, or maybe indication of higher prices to come. A second share price that we can look at is Facebook. Everybody's talking about it. There was quite a big rally from a significant low. This seems to me like a basing pattern. We are still in sideways channeling range. Only a significant breakout above the current levels and especially above 25.52 and above 27.15, which is this kind of gap here. Would appear to be a bullish, but you would normally expect to see a bit of a pullback to retest the previous resistance and our newly formed support. Stochastics and RSI are creating higher lows where price was going in a sideways consolidation fashion. So just to keep an eye on something. This is the price action of Nasdaq 100 index, and I actually managed to zoom in to show you this one. The price action of Nasdaq is very, very similar to Apple computers, and this is a bullish hammer or possibly a reversal hammer that I was mentioning about at Apple computers as well. Nasdaq found support at the cluster of these previous lows around 25.10, 25.08 level, which is also a lower Bollinger Band as well. All of the indicators like RSI and stochastics are curling up from the oversold, and we're still waiting for a crossover of moving average across MACD. Yet again, we have a bearish cross here of 20 crossing 50 and 20 crossing 200 as well. So is this possibly a creation of a lower high? And then we could kind of have a trend line going this way, an opportunity to short at this level as well. We'll have to wait and see. This is the price action of S&P 500. It created a similar kind of candle pattern as well on Friday. We saw quite a bit of a selling. The price found support at 1343.50, which is also this previous low here as well, 1354, and closed slightly above that on the day, just retesting this 1360 level. Same as Nasdaq, everything is oversold, but MACD, we're waiting for a crossover. We saw quite a bit of selling. The bias, overall bias in the market is bearish, and therefore the trend is downtrend, and we should respect that. So if we see a bit of a pullback or a corrective rally, the reaction to that rally will be telling, because majority of the traders will probably try and sell into that rally. However, majority of the traders who were short all along would probably be looking to unwind their positions and cash in some of the profits as well. And also these levels are looking fairly inviting for the buyers as well. So keeping an eye on that. Definitely resistance on the upside would be this 1382 level, which is 200 period moving average. That'll be quite significant. This is DAX 30 German index. It still appears to be stronger than a majority of the US indices. That includes FTSE as well, although we saw a bit of a sell-off and the loss of this falling support trend line as well. But the price action is still clearly trading above 200 period moving average. And if these levels hold and support is respected, we could possibly see a higher price to come. So resistance on the upside for me would be 7120, 7182, which is this two previous lows, before we attempt to go higher and retest 7215, which is 20 period moving average as well. Support on the downside is clearly located here, which is 38.2 fib retracement at 6876 and 6824, which is 200 period moving average. Volatility index, we saw a price action for indices, especially S&P, creating lower lows and kind of significant lows, where price action of volatility index went into a sideways consolidation. So we saw a fairly decent pullback on Friday, and we would need to wait to see the reaction to the news and numbers that are going to be published next week. And if we see a spike in VIX, obviously potential resistance on the upside, it's located at 1763, which is the fib retracement, also 200 period moving average, followed by 1906 level. Alternatively, support on the downside would be at 1562, followed by 1593, 1450 level as well. We should keep an eye on that as well. Gold. Gold was fairly much capped by this 1739 level. We could not break higher and create a daily close above this previous neckline, which was support, now newly formed resistance, and then subsequently we saw a bit of a pullback in gold. This could be fairly corrective if these levels hold and they're respected, and we see a creation of a higher low. It would possibly appear to be a shoulder and a head and shoulder information. It's not confirmed just yet. We would need to see a breakout higher. But if these levels hold, obviously a rising trend line, fib retracement, moving averages, lower Bollinger Band, there's a cluster of things here which are possibly supporting it. The red flag is overbought level here, and obviously our RSI is curling from neutral towards a lower as well. So we should keep an eye on this, but if this stays where it is and we confirm a higher low, potentially could be seen as an invitation by bullish traders to go long. The losses of these levels would be concerning, and then in that case all of this would be seen as A, B, C protracted retracement, so we should keep an eye on that as well. WTIC or NYMEX traded oil, we saw a bit of a bounce back last week and then subsequently this week as well. Significance is that the current price action is trading above 20 period moving average, but this looks like a falling wedge, the breakout of which could be seen as a very bullish. Obviously there is a bit of uncertainty in Middle East. We have situation with Israel, Gaza, all sorts of other things happening. So MACD is crossing. We have a fairly significant support here at stochastics. and RSI as well. So support on the downside can be found here at 85 level, which is a nice round number and a cluster of previous lows, followed by 84.05, and these two levels should hold. Otherwise, we'll see a further significant drop. Alternatively, if the price moves higher, the first significant resistance on the upside, it's located at 87.70, followed by 89.72 and 90.14, which is 50 period moving average. And the last thing that we are going to look at is dollar index. Obviously, seriously overbought. Dollar index is actually firming up above a psychological level of 80 and also 200 period moving average, which is at 80.71. But we have a creation of loads of narrow bar ranges, tiny little candles, which are either dodges or fairly difficult to read. Significant breakout higher above the current level of 81.50 would be very bearish for commodities and obviously for euro and cable and sterling. But this looks fairly extended as well. So we have a bullish cross here where 20 period moving average is crossing 50, but some sort of a pullback to a lower levels would also be quite healthy for dollar index, and it might give it the strength to move higher. Alternatively, if we persist with QE3, maybe we could see a lower prices to come. So just to keep an eye on as well. So hopefully you enjoyed this session, and if you have any questions, contact me and I'll talk to you soon. Thanks.